Welcome. Thank you for taking interest in my indicator, RastaWay. This is an indicator that I've made 2020. I've been using it since, and I've been watching the signals, trying to see where I can advance it or at least control it. But up to now, I still see it being very effective, especially on the market that I designed it for, which is the pound yen. And it's a bit broker sensitive, so sometimes you might apply it to a different broker and you get slightly different results. It's because it works strictly on the bar close, and some of the clocks they close differently. But with my preferred broker, which is SageFX, I'm not sponsored, but yeah, I find their data feed to be very good, and it works consistently, especially on the pound yen 1 hour chart. So imagine a scenario where you're coming to the charts and you have all this. Looks a bit like chaos, up, down, up, down, up, down. It's a bit hard to actually understand, but with the help of RastaWay, this can all be changed. Like this is the default settings that we have. If you download my tool for testing, or if you do a good thing and buy it, yeah, this is what you'll be looking at. So this whole chaos has been decoded. It might look like it's taking sell trades when the market is going up. Yes, it is. It's because it still believes that we're going to make lower lows soon. So there's no harm in taking a sell trade when the market is still going to break below the lows. So as far as I'm concerned, from this point to this point, definitely we are in a downtrend. If you tell me we are in an uptrend here, well, I'll beg to differ, because from here to here we're still smashing lows and we're still respecting the highs. I'm a very strong support and resistance trader, and I have a way of understanding it, which led to the development of these tools together with other applied logics. So as you can see, it tries its best to decode the market and give signals when the market is breaking out, changing trend, which is noted by this top histogram here, which shows green. So effectively, when we are in this green zone, we are being advised to take buy trades. This will be a retracement which ends up turning into a reversal. So the bottom part shows a quick trend change. Like, it's very sensitive. When the market goes up, it goes up with it. When it starts going down, it recognizes that, and along the way it's following the market pretty closely. So this is only for information. This is your buyers and these are your entries. So looking at this, personally, like the way I trade it is, I open when I get a signal. Initially, when I work out my plan, I say, okay, how much am I willing to lose? I'm willing to lose, say, 3% per trade. So how much drawdown do I usually see on trades before they come back into profit? The ones that win. So sometimes I'm looking at 79 pips before they go into profit. So effectively, if I tell myself 3% should be equal to 120 pips, then every time I gain 120 pips in the market, I'm gaining 3%. Each time I lose 120 pips in the market, I'm losing 3%, right? So with that in mind, I just open these trades with no stop loss. It sounds unreal, but still risk is managed because I'm controlling my risk globally. It's not risk per trade, it's risk in the basket. Everything that's on the table, that's being controlled, right? So imagine this: you've been notified by the indicator that we have turned bearish. Immediately I would summon a trade here. I would enter a trade, put my additional trades, and look for targets. How do I look for targets? So many different ways. Like, I would just come and say, okay, if I enter a trade there, I'm looking to exit if it violates the laws. That's high, 100 pips on that one. That one would give me 100 pips. So already I'm almost 4% here. Another trade, that's the low, smash it. 144, that's already 3%. You look for another one. You enter short there, pushes lower, doesn't exit, pushes higher, pushes back lower, it doesn't exit again. Keeps doing that until it goes all the way and closes there. So if by some reason along the way I get all these additional trades summing up to 120 pips, it just closes with a 3% loss. Right? That's how I would manage these. Another way is to just pull my fibs. That'll be like fib right there. So I'm looking to exit right there, 93 pips. I'll take this trade here. I'm looking to exit there, it doesn't happen. I take another additional trade there, I look to exit there, it happens. 60 there, 31 there, 90 pips. I take another one there. I'm looking to exit lower, but the market changes trend and I lose 71 pips. Right? Remember, all these trades, they are being entered with controlled risk. All these trades are being entered with controlled risk. Personally, this is the best way, using fibs. Trend change, it's now bullish. You start buying, find your targets on the upside. Similarly here, you take a buy, you exit right there, 153, that's already plus 3, more than 3%, and you had a drawdown of 115. It was close to 3%, but it didn't rupture. It didn't get there, so this trade would win. This one, obviously, it won, so it has enough room there to close. Similarly here, all these trades will be added, and depending on your exit strategy, all these trades will be profitable. Just this part alone, you're already close to like 8-9%. Just this part alone. That's when you come to this point. You start adding trades. Well, this one would win. You try adding again here, another trade like that. This one would win right there. Let's just delete this one because we're not using it. We're working with some drawdown of 120 pips. So this one will also win, its 82 pips. This one will also win right there, 99. So effectively what I'll do is, if I have trades open, if any one of these hit TP, I'll just close everything and start the whole basket again. So right here you can see that trades are now being added, add, and if it adds up to 120 pips, which is somewhere down there most likely, well, even earlier, because we had 3 trades in there, it would close somewhere there with probably like, I don't know, like 71 there. We have like 90 something, that's more than 120, so we'll close there with 3% loss. This one also will be added into the market, hold, stop loss. But if I lose a trade, one of them, I would hold trading until price trades above that high. If that doesn't happen, price tanks and I'm now starting to short. That's 220 pips, 6% or like 5% plus. Another additional trade there, takes its drawdown, didn't get to target, stop out. This one gives you profit, this one gives you a loss, whichever way. So depending on how you manage these, now you've stopped out, you're not adding, you come here, you add new trades, you find targets on the high side, that one will give you profit. That's 61, 51. This one, I don't know whether it will win or not, but most likely it will. That's profit right there. Price changes to down. We do exactly the same thing. We expect drawdown right at the end of the trend. We hold trading after stop loss unless if it breaks this low. We start buying, push higher, find targets for this. Entry 200, stop out. We hold trading. Price breaks that high. We start trading again. We take profit on the high end. Sometimes things like this will happen with trading rules. If you're strict on your rules, you shouldn't be trading this, as much as it looks gold like this. Other re-entry criteria that I can advise is you look lower. This indicator here draws swings. It draws sections, the bottom one. You have the green, you have the red, you have the green. So this not's a high, this not's a low, this not's a high. So effectively you can even come here and draw a trend line like that. That's the high of this green zone, high of the red zone, green zone. Join the two. This is how you can even apply a trend line strategy. A trend line strategy effectively every time, because your highs will be consistently created by the algo, and all you have to do is apply whichever trend line rules you have. This will take away the risk of doing a back test on a strategy and picking this as a high because it looks good today, but in a real market you can't. But with this tool you will every time. If this happens, you'll be able to see this breakout here every time, because this tool is non-repainting. It will clearly mark these highs for you every time. It will do it correctly. But anyway, you keep doing that, taking trades as the algo prescribes. Now we are selling. Big bear candle there, big bear arrow, smaller arrows, additional trades, monster trades, all of them, they're racing towards the lows, taking profit. Past results cannot guarantee the future. So as much as this looks good, it doesn't guarantee that when the market starts moving ahead, it will still be looking this good. But for now, this is what we have. I'm not guaranteeing you any profits, but what I'm saying is currently this is what we have. If it's anything to go by it. These signals are not always true, they are not always right. As you can see, we have losing trades here, but it doesn't matter. That's not what constitutes a winning strategy. A winning strategy is a combination of good entries or entry signals with an edge, and very good money management, and strict adhere to the rules. The rules that you formed that gave you an equity curve of profit are the same rules that you have to apply in the future. That's what makes a good strategy. So even if when you come to the market and you say into this indicator and you say, oh, you have losing trades, yes we do. They will be managed, and recovery will come soon. Failed trades, profitable trades, profitable run. Imagine having an indicator that can clearly tell you before the whole market crashes like this. It tells you we are going bearish from now on. So when all this is happening, the mind is clearly saying, nah, we are bearish. We are bearish. I've been using strategies that do like add on to losing trades, controlled risk, similar like what we're explaining here, and they've been successful because of the bias. But that doesn't guarantee that the future will still be the same. All I'm saying is this is what we have now. Currently, this is what the indicator is doing. It's giving you areas where you can add value and look for targets on the upside. It did violate the high after it summed up all these buy trades. It's a process of accumulating size. Imagine you have one lot to put into the market. You start sizing in, and by the time you get up down there, you fully sized in and you hold. Then you look for exits on the top side. Once you start violating these highs, all these, they'll be carrying a lot of volume. This is 700 pips from the bottom. If this history is something to go by, go ahead, make the move, buy the indicator. Imagine Friday, the day I launched my indicator on MQ05, I think I only had these two signals here, but this is how the market later on progressed. Probably maybe I had these two, and then market pushed higher. I wasn't phased because I knew that my bias is bearish. So when the market started turning, I was ready to pounce. Take these sell trades, 354 pips. But anyway, that's me. That's how I would attempt to utilize these signals. But if this is anything to go by, history is showing that this is a good strategy with an edge. We are looking at 1 year's data. That's all I have from my broker from the 25th of November up to now. If I run an equity a back test on my EA, it would look something similar to this. But history does not guarantee the future, so do your own assessment once you've taken the plunge to buy the indicator. Create a good trading plan and ping me, and we can discuss. We can have a chat group where we can share ideas on how to use it, or probably just check out this channel because I'll be talking a lot about this indicator going forward. Thank you for your time, and happy peeping.